As financial relationships with Hong Kong develop under CEPA 3, local banks are preparing for the full opening up of the sector to foreign competition. Under WTO commitments, it's to be completed by the end of next year. This week I talked to Susan Rice, Chief Executive of UK-based retail bank Lloyds TSB Scotland. She analyzed the challenges and opportunities facing overseas banks eyeing the China market. As China gradually opens up its financial services market, what do you think are the difficulties facing overseas banks who want to enter this market?
Well, as you probably know, there are a lot of overseas banks that want to come in because the economic picture here in China is so robust over the next couple of decades anyway. And that makes it a very attractive place for banks to come in. What we see right now is some of the largest global banks coming in and associating with some of the largest Chinese banks. I think one of the big challenges will be for the overseas banks to fully understand and actually stand back and realize this is a different market with different companies, different businesses, different people in it, and they may behave differently in terms of financial services. So it will be a matter of pausing and waiting to see what those differences are, not assuming that the Western way of banking is the way that will work here. I'll give you an example. For many years, most Western banks will have a lot of experience with unsecured lending to individual customers, what we call personal lending. We build up characteristics of those borrowers, so we can predict if a new customer comes to us whether they are likely to repay the loan or not. That helps us know how to price that. Now, that kind of activity hasn't happened here, and even in various Western countries you see different behaviors. So while the overseas banks will have built up elaborate credit score models, those models they can bring in as a piece of science here, but the outputs will be different because the customers here, the people here will behave differently, and everyone will have to be patient until that kind of data is built up here.
We know it's always easier to say that we need to understand the local environment and study the customers or whatever, but how do you actually do it? How do you actually overcome such difficulties?
I think it is a matter of, first of all, patience and not coming into a new country and assuming you know the right way, because that is never the case. I think it's also a matter of talking to people here in this country, talking to bankers here, getting to know them and working with them. I think that's probably the most important thing to do.
Do you think it'll be easier if you collaborate with a local bank?
I think there will be both competition and collaboration. I think collaboration makes a lot of sense because overseas banks can bring in the techniques that they have in their experience and share it. But I think it's the local banks here who know their customers and who will understand more what those customers want and be able to take those techniques and tailor them to the market here.
Now, in terms of a business model or collaboration model, what would you think it would be a healthy working relationship with the local banks here?
I think there are probably a lot of models, and I suspect we will see a lot of different models here. I think in some cases overseas banks are buying a stake in some of the large banks here. That means that the overseas bank might have a seat on the board, but I think governance of companies here is different than it is elsewhere. So even if you have a seat on a board here, it doesn't necessarily mean you can influence the way the bank is run. I think collaboration, joint ventures, is a very interesting way to do it. I know some American banks are looking to use the branch network that may already exist with a bank here, and they think they can bring in different products and use the branch network here to distribute. That's a viable model. I think there are other ways that there may be some influence, for instance, an international advisory service, and rather than becoming part of a bank in another country, it comes in and advises local banks how they might improve what they're doing.
Talking about competition and collaboration, what do you think is the major competitive advantage of foreign banks?
Probably two or three things. One of them is that they will have operated in as private sector companies, not government-run companies, through economic cycles when the economy has been strong, but when the economy has come down, and they know how to operate through those cycles. And because the banks here have been state-run, they won't have seen or had that experience before. So that's one advantage. I think another is one I alluded to, which is that many overseas banks will have been collecting a lot of data about their customers, about what their customers, how they behave with financial products, what they want, what they need, and we use all of that data to create new products, and we use it when we market to the customers. Now, I don't think a lot of that kind of data exists here, so that's an advantage. I think there's a third area, and that is that many Western banks, particularly in the UK and in the US, which are countries that I know well, have learned to be very efficient internally in terms of what we call manufacturing in banking, and that means that they reduce their costs, and that means they can lower the price. So if you have an overseas bank coming in, distributing its products through a branch network that exists in China, they might well compete because the pricing is much lower, and I think the banks here will probably need to look at some of those efficiencies.
So given all these competitive advantages you mentioned for foreign banks or overseas banks, what do you think are the business areas that they should focus on when they first enter the China market?
I think there are a number of areas I would expect them to focus on. For one, I've talked about personal lending. Right. Well, many Western countries are countries of borrowers. A lot of people borrow money. So I would expect that banks would come in to say, we have a lot of experience with personal lending, and you have less perhaps in China. Credit cards in particular, because credit cards are a kind of international way of purchasing anything. And although there are credit cards here, I think that the credit card companies will come in a big way. I think the other area is probably in long-term savings, because China, by contrast to some other countries, as I understand it, is a country of savers, which is a very good thing, actually. And what we have, many banks will have, is a range of products which will help people save and get a return both in the short term but also in the long term. So, for today, for tomorrow, for their children, for their own old age, they can save. And I think a lot of focus will come there.
Mrs. Rice added that investment advisory services are also a strong area of expertise for overseas banks. She expects such products to be on offer very quickly.